let's speak about some value stocks. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove that fact. And today we're going to speak about some stocks we haven't spoken about for quite a while on the channel. And there's a few reasons for this, okay? We're going to be predominantly focusing on value stocks and also Rona stocks. They somewhat go hand in hand in general. A few reasons for this, okay? Cases in general have been going up largely across many portions of the world. Where I'm from in Ireland, we have gone back down into a level 3 lockdown. That essentially means you can't leave the county that you live in. The restaurants and pubs are all closing again. It's not a full lockdown. We're allowed to go to the shops, we're allowed to leave the house, etc. But things are going in the wrong direction. And also we've seen Trump say some quite concerning things on Twitter as of late, all in regards to a stimulus package that we will touch on briefly. And you may have noticed that I haven't really been buying anything lately. I didn't buy anything last week and I haven't bought anything yet this week. There are some things I'm looking at, but yeah, I'm being quite cautious with my money. So what I want to do today is kind of give you guys some ideas of not even necessarily companies to watch, but sectors to watch and start doing some research into in preparation for a potential, second lockdown in case the vaccine doesn't come out quick enough. I want to push you guys onto some value plays if that's the kind of investor you are. I am predominantly involved in growth stocks, and I'll be honest, I prefer them to value stocks. They are very intertwined. I do think you have to be a lot more careful about your entry with value stocks. So a few different industries we're going to cover. I just want to give you guys some ideas so you can go out and do some due diligence of your own. So right before we get into the video, can I please ask you to hit that juicy like button? It really would help me out. I'd appreciate you very much. If you're new around here, what are you waiting for, my friend? Please hit that juicy red subscribe button. We're this close to 45,000 and we're trying to get to 50,000. And please drop me a comment down below. Let me know what you think of the video. I'm also interested in knowing what you have your eyes on. If there is a little crash or if there is a pullback, just let me know what you guys are watching. With that being said, guys, into the video. So before we can get into the industries, I want to speak about Trump and his recent tweeting that I'm sure everybody will be aware of at this stage. And also some stuff going on with the Fed and Jerome Powell and what they are saying in regards to the necessity of a stimulus. I'm known as a growth stock investor right now, okay, and I want to bring you guys to a quote by Warren Buffett. Growth and value investing are joined at the hip. And I have said a couple of times in the past, value investing is just growth stock investing with extra steps. Now I know that's not strictly true, but that is a way I look at it sometimes. So in growth stocks, an ideal scenario is you're getting into a company, very shortly before a major catalyst happens. Look at Workhorse and the USPS contract. I mean, look at Zoom and Shopify back at the start of the Roni. There's examples in every single industry out there. When it comes to value investing, okay, you're looking for companies that have been absolutely beaten up. So right now we're looking at airlines, we're looking at cruises, hotels, restaurants, casinos. And so we're looking at these companies that are in horrific positions on purpose because we're hoping that one day they're going to be back to a good position. And that's the reason they're called value stocks, is because in general PE ratios will be the main metric people will use and they will show up as undervalued. Whereas with growth stocks, we're not necessarily looking at companies who are beaten up. We're looking at companies at a particular stage of their life cycle. So that is why I have lent more towards the side of growth stocks. I think at times they can both carry similar risks, especially if you get the timing wrong. But I do think there is a time and a place for value investing. I just think it takes a lot of patience. So that's why I want to make this video now, because I don't see many places I'm happy to invest in these value stocks, but there may come a time. So the first thing to speak about is Twitter, is Donald Trump. Nancy Pelosi is asking for $2.4 trillion to bail out poorly run, high crime, democratic states, money that is in no way related to the Roni. We made a very generous offer of $1.6 trillion and as usual she is not negotiating in good faith. I am rejecting their request and looking to the future of our country. I have instructed my representatives to stop negotiating until after the election when, immediately after I win, we will pass a major stimulus bill that focuses on hard-working Americans and small businesses. Whew, that is pretty crazy. People did not like this, okay? There was a lot of panic in the market, and rightfully so. I mean, this is scary. No stimulus package, the stock market's going to take a big hit, and that's exactly why I'm speaking about this right now. Now, only a matter of hours later, Donald Trump came out with a few more tweets. So the first one here, which actually is in line with value stocks, the House and Senate should immediately approve $25 billion for airline payroll support and $135 billion for paycheck protection program for small businesses. Both of these will be fully paid for with unused funds from the CARES Act. Have this money, I will sign now. So I mean, when people speak value, a lot of people will think airlines straight away. And I've actually seen a few people speaking about this in my Discord group as of late. And if you've been on this channel for probably 5 or 6 months, you'll know that there was a time where I was very interested in airline stocks. Now I did go off them a bit. I got into more so growth rather than value, but we are going to speak about them later on. He also came out with this. If I am sent a standalone bill for stimulus checks, $1,200, they will go out to our great people immediately. I am ready to sign right now. Are you listening, Nancy? A lot to be taken in, guys. And the conflicting information that's coming out has caused an awful lot of uncertainty in the market. And we have seen a lot of stocks moving very weirdly across pretty much every single industry you can imagine. And the market doesn't like uncertainty, okay? Whether it has a generally bad or good tone to it, the market does not like uncertainty pretty much ever. So what Trump was saying came out the same day that Jerome Powell was speaking. He essentially said, too little support would lead to a weak recovery, creating unnecessary hardship for households and businesses. Over time, household insolvencies and business bankruptcies would rise, harming the productive capacity of the economy and holding back wage growth. And this is serious. This would be absolutely horrific for the entire world, not just the US. And so hearing this from Jerome Powell, saying that we need more support, that's going to worry people, and I completely understand why. Because now we're not just speaking about an unknown virus. We're speaking about the future of the US economy, which, to a large extent, plays a big factor in the world's economy. So we're seeing this scary information from both sides. We all know how Trump can be, so now we really are waiting to hear what's going to happen with the next stimulus package. That is the biggest thing right now, and that's what's going to dictate what happens with the markets next. Now, I'll be honest, in regards to growth stocks, I don't think something like this is going to have the biggest effect in the world. I think that's one of the reasons I like growth stocks. A lot of things can move them, okay? Market movers, market sentiment, big news, small news. But especially when we speak about EV, they move differently to a lot of other industries. I think that's very fair to say. Something like this will, in my opinion, affect your blue chips, it will affect your big dividend players, and it will affect pretty much all of the value plays out there. Now, in this video, I'm not going to spoon feed you. I'm going to give you a couple of examples from each sector, and I urge you to go and do some research yourself after this video and form some thoughts and opinions, and maybe have a few companies that you're going to keep a little bit of an eye on going forward. See how the price moves, see how price action works in these companies and these industries. So we're going to start it off with the airlines, and there's just two companies I want to touch off. So Delta Airlines, I've always been quite a fan of. If we look on the yearly chart, okay, we can see very slowly we were going up, but as of right now, we're still down 40% on the yearly chart. Funnily enough, on the 6-month chart, they're actually up 38.4%, which is quite exciting. A lot of you will remember here, a lot of us were involved in Delta, in American Airlines, United Airlines, everybody, when this massive run happened here, and we very quickly sold back off. I believe it was right around here that Warren Buffett sold off all of his airline stocks. Quite clear to see why this could become a value play. I mean, from their peaks, they lost 2/3 of their value. I actually remember buying these guys sub $20. They got beaten up because of something that was outside of their control, the Roni. Obviously, all of the flights pretty much were cut off. They're making no money. They're still making far less money than they need to. So airlines are one of the easiest to understand value plays out there. So it's your job to find the best companies. Now, I was always quite interested in Delta, but I will say is I don't see the most upside potential in the world. That's why I sold out. This still is, in my opinion, quite a risky investment. And our previous all-time highs are pretty much $60. We're sitting at 32. Like, I wouldn't see it as being a reality that within 2 or 3 years, we're making all-time highs. And so, I mean, yeah, if it takes 3 years, you're going up 33% a year, that's a good return, but not for a stock that carries this much risk. Now, where it could become a good return is if it does have another relatively decent crash. And then the second airline stock I'd like to point out is Southwest Airlines, okay? Generally believed to be the safest of the airline stocks out there. But again, I mean, is there really that much upside potential at current prices? If I'm investing in a value stock, I want to see potential for hundreds of % returns within a span of 5 years. And I just don't think I see that with airlines right now. But I mean, again, if Southwest Airlines was to drop to the 20s, I mean, if Delta was to drop to 15s, 20s even, I see decent potential. So I want to make it very clear, I'm not invested in any of the companies we're going through today, and I more than likely wouldn't invest in any of them at current prices. We're just trying to get an idea of what we could look at if things go bad. Carnival Cruise stock, I mean, everybody knows these guys. If you've been on YouTube for 6 months, you know who they are. What a crazy journey these guys have been on. Now, this is more of a value play that I could get behind. Sad story, I wanted to buy these guys below $8. I had my phone open, I had however many shares in there, it was like $7.97, and I never clicked the buy button. But it's okay, you win some, you lose some. So Carnival was downtrending for a few years before the Roni even hit, but there was a stage where these guys were a $70 company. Right before the crash happened, they were above $50 a share. So I mean, these guys are still down about 70%. Now this to me is a real value play. And why I say that is because it's high risk, but it's very high reward. The possibility of bankruptcy most certainly is real. There definitely is a world where Carnival Cruise Corp goes bankrupt, but there is also a world where they don't. There is a world where they crash again, maybe to $10, $12, maybe even lower, and then they go on a nice recovery. Or there's a world where this could be the bottom, and we may never see $10, $12, $13 again. I don't think the end of the crash is over for Carnival personally. I do think we'll at least see, $12, $13. But again, remember, we're looking to the future. We're getting ready for if something really bad happens, and if that's to happen, I think it would be worth taking one more good look at these guys if you're looking for a really high risk, high reward value play. Then we have restaurant stocks, okay, and again, very easy to see why these guys would have been beaten up. I'm in Ireland. I mean, restaurants have been closed for the majority of the last 6 months, and they just had to close again. Literally, it was either today or yesterday. And I know we're investing in US stocks, but you get the picture. It's been the same for a lot of places. Now, I have looked into so many restaurant companies. I've spoken about at least 5 or 6 on the channel. I have the Cheesecake Factory up because that's probably the one you guys know the most. I haven't found any that I am comfortable enough investing in yet that I think carry enough upside potential. I mean, you look at the 6-month chart on Cake and it looks really nice. We're up 60%. But scroll back out to the 5-year chart, and I mean, we've been downtrending for a very long time. Slow and steady on the way down. They're still down more than 50% from all-time highs. But I mean, yeah, since 2017, it's been very bad. Now, you can see that once they got out of the Great Recession, okay, they went on a beautiful run to the upside, a really good run, and that's what people are looking for with these value plays. But again, I'm not going to go too in-depth with these restaurant stocks because, to be honest, I haven't done the most research in the whole world, but every time I've looked, I haven't found anything that interests me enough. I just see much better places to put my money, but maybe some of you guys understand the industry better and should take a bit more of a look into it. Second last industry, casinos/hotels. MGM trading at a PE ratio of 5.65. Look at this absolutely crazy stock chart. Pre-Great Recession on an immense run. I mean, they literally lost over 95% of their value. Now, they then proceeded to go on again. A very nice run over the preceding decade or so. I see casinos as some absolutely insanely high risk plays. I do see room for massive reward, but I do also think that this scenario is very different from the Great Recession in regards to casinos in particular, because not only are a lot of people going to have a lot less discretionary money, there's also going to be social distancing for a very long time. We're going to be at reduced capacity, which for casinos in particular is not good. I mean, they need a lot of people in there to be making real money. Restaurants can implement social distancing quite easily. Airlines can do the same. A casino can't. If a casino has to shut off 50+% of their whole facility, not going to be a lot of money. Now, the hotel aspect of things, I don't think in the long term will be hit as hard, but casinos in particular, yes. But again, that could mean the highest returns. The highest risk equals the highest potential returns. So if things go better than expected over the next few years, it's going to be good for these guys. Now, these next ones aren't value plays by any means in the world. They're the exact opposite of value plays in all honesty. But they are kind of, Rony Rona plays. So everybody will know about Zoom, will know about Shopify. They've been on these incredible runs. And it really is only the last couple of weeks that they haven't done anything. I mean, they have just been going up and up and up. Yeah, we have our ups and downs or whatever, but in general, up and up and up. A lot of people made a lot of money here. I have invested in these guys, or Shopify, for example, is another example, because I believe their price has been so inflated because of the Roni that when the Roni's gone and life goes back to normal, I don't think we're going to see that same demand. I don't think they'll be able to maintain these high PE ratios. And ultimately, I think the price will go down at some stage. If there is to be a second major lockdown, I could see it as being a swing trade opportunity. Now, I am not a swing trader, I'm a long-term investor. But of course, if I see money to be made, I'm going to get involved. So, your Roni Rona stocks, your stay-at-home stocks, your Zooms, even your Switch, your Shopify, etc. They're the main industries I would start keeping an eye on if you are interested in value plays in particular. Again, I do generally just prefer my growth stocks, but I do think we could see some very exciting opportunities arise if you're willing to have a little bit of patience. But I suppose it's only a matter of time. In an ideal world for the majority of us investors, and for us who just want to live our lives, value plays aren't going to crash again because the economy is just going to get better and better. But it is worth keeping our eyes peeled, guys. So my friends, there we have it. A little bit of a different video than I usually post, but hopefully I was able to give you some value. If you did watch all the way till the end, you, my friend, are a true legend, and I really do appreciate you being here, especially since it is a little bit different than what I usually speak about. You are very, very appreciated, and you're helping me out massively. If you did enjoy the video, could I please ask you to hit that juicy like button, drop me a comment, and subscribe if you're new around here, because genuinely all of that helps me out so much. I really would appreciate it. But yeah, value plays are exciting, and I could understand why you would want to be a value investor. If you catch them at the right time, I mean, they're not the most risky in the world. world. But if you get in at the wrong time, or if you don't really know when the right time is, yeah, they can carry a lot of risk, and very quickly you can see big red in your portfolio. So just be careful. But as Warren Buffett himself said, value investing and growth stock investing are joined at the hip. A lot of people think value investing is safe because it's undervalued. In my opinion, it most certainly isn't, so just don't get that impression. Also guys, if you are interested, please feel free to hit that first link in the description. You will be able to sign up to become a Patreon, and that will give you full access to my private Discord group, and in there we have nearly 400 patrons who just speak about stocks all day long. We have specific stock channels, we have value stock channels, growth stocks, politics, memes, everything you can think of. It genuinely is an awesome community. So if that's of interest to you, please click that link. It also of course directly supports me. But anyway guys, I hope you all have an absolutely fantastic day. I hope the market treats you well. I will see you for another video tomorrow. Peace.